Bitcoin is still viewed as it's a speculative store of value. It's viewed as a risk asset right now. It has a high correlation with other risk assets.
One of the biggest catalysts for Bitcoin, particularly in US markets, was the Grayscale Bitcoin Trust.
I think Bitcoin should focus on one thing, and that should be flipping in gold.
Hey everyone, and welcome back to Wealthy Value. The US government has pushed a total of $9 trillion into the economy so far. With tax dollars so desperately needed, it's fair to assume the IRS will focus on cryptocurrency. But what if you could trade crypto tax-free? Here's how to do it in 30 seconds. Step 1. Open a crypto RIA account with our friends at iTRUSTCAPITAL, the world's largest crypto RIA platform with over $3.5 billion in transactions and no monthly fees. Step 2. You can transfer your existing IRA, roll over your employer plan, or make a cash contribution through ACH transfer, bank wire, or check. Step 3. Start investing. Available assets include not just Bitcoin and Ethereum, but also Cardano, Chainlink, Polkadot, and all major cryptocurrencies, as well as physical gold and silver. All digital assets are held in offline cold storage with the leading institutional custodians, Curve and Coinbase Custody, which are both insured and backed by the largest venture capital firms in crypto. Use our link, iTrust.capital/value, in the description below to get $100 in Bitcoin when you open and fund your account with iTrustCapital. And now, back to our video.
Yeah, I mean, it took me by surprise. My base case was that we were going to see the typical year-end rally. Obviously, most of us had the same idea. Usually when most of us have the same idea, it doesn't work. But the other thing I did know is, having come from that finance background, knowing how hedge funds and institutions work, I also knew that if you're a hedge fund and you've got crypto in your portfolio, you've probably had a good year. So to get paid, you tend to close out your portfolio. So you know what you're going to get paid at the end of the year. So they are incentivized to sell their positions, to go away for Christmas, have a break, that kind of stuff. The institutions like pension funds and others, they tend to rebalance their portfolio. So like Ethereum's up 500% this year. So if they started with a 1% weighting, they're now at a 5% weighting. So they'll probably bring it back down to, let's say, a 2% weighting in line with their allocation. So you've got institutional sellers that never really were in the market before. And they're not expressing, I don't think, a negative view of the market. What they're just doing is rebalancing for year end. And so my general view is that most of that selling is now done. And so the next thing they all come into January with is a new P&L. Everybody fears change, right? That's just a human thing. And the rate of change here is extremely fast. So the gamers were a distinct group of people that had their little world and they knew how it worked. This other world has walked into their world and said, hey, we can bring value where you can move this stuff across games and you can own your things. They're like, back off, this is ours. Traditional media fears change, the banking industry fears change. When change is happening so fast and it's not being driven by one entity, it's this broadly spread phenomena, it's scary because you don't feel in control. What we'll find is that over time, volatility falls as more people are in the network because you don't have discrepancies between buyers and sellers that create illiquidity because there's more people in the network. So you'll tend to find, Amazon now is trading off call it a 30% volatility. So it's half that of Bitcoin. So I think, as Bitcoin or cryptocurrencies get to 1 billion users plus, what we'll find is that the volatility will fall, the prices become less exponential in nature, both to the upside and the downside. Just use the adoption curve, assume it slows a bit, because adoption always slows because the rate of change goes down when more people are in it, right? So it's easier to go from 1 person to 2 people, that's 100% growth, than from 2 to 4. So just extrapolating the numbers, you get to 1 billion people by 2024. And that's by slowing the rate of growth down to 80%. Look at the holders of crypto. They're not the traditional holders of equities.
Yeah.
So here's a bunch of old people wagging their fingers saying, well, it's much more volatile. The younger people who own crypto like the volatility because the volatility gives returns. risk reward. Well, the equity market gives less of that. I don't see why nation states will necessarily accept that everybody's a sovereign, free digital individual, because guess what? You've got roads, hospitals, blah, blah, blah. Governments want taxes to provide services to people. So if you don't like it, you have to leave. Now, it's not easy. Go with your Brazilian passport, try and turn up in the Cayman Islands. It's not easy to do, or go to the United States. So I think governments just care about the tax. And yes, the power of controlling money is important, because we've talked about that. In complex adaptive societies, money is the organizing principle to get everybody to do stuff. It's the incentive. So now we're creating these different forms of money on these other digital sovereign states. They're going to coexist, and they're going to have to learn how to coexist. One is your physical state, and the other is where you live in the metaverse. You pay taxes in the metaverse too, whether it's ETH gas fees or whatever it is. You still pay taxes. You know, this utopian idea of there's no taxes, we're all free, it's bullshit. Everything has a cost in life. And so some digital sovereign states like Solana is a cheaper tax system than the Ethereum sovereign state. They're all the same. People apply a lot of kind of fancy principles, but these are all the same. And it's the same with taxes in the UK versus the Cayman Islands. You know, the UK has higher taxes, the Cayman Islands has no direct taxes. So it's currently about 2.5 trillion. If I look at all the other asset classes around the world, equities, bonds, real estate, they're all between 250 and 350 trillion. I think there's a reasonable chance of this being a $250 trillion asset class, which is 100x from here, which would be the largest growth of any asset class in all history in the shortest period of time. That will pretty much dovetail in with the idea that 3.5 billion people are using it. So if 3.5 billion users in 2030, well, the market cap is going to be something like 250 trillion. I think we're probably, because of the new entrants into the market, the downside will be less big in the major cryptos. It'll still be huge in the more risky stuff. And I don't know the format of where we go, whether we keep going that log trend and we keep hitting the bottom of it in a sharp sell-off like we did this year, down 50%, then back up again, or whether we do a down 50, down 40 and trend sideways for a year. I think we'll see both of those types of price actions. So, but I don't think we get the down 80, 90. I don't think that's applicable in the market as deep as this now. Who cares, right? They're two different things.
Yeah.
I mean, it's ridiculous.
Yeah.
So they're two different things. I think the application growth of the network of Ethereum is currently miles larger than Bitcoin, and therefore ETH is still undervalued versus Bitcoin. But ETH will lose market share to others, and it's the whole space will go up 100x. Ethereum is a richer, deeper environment with more participants in the network, so it's going to be slightly more resilient at this point, and that's okay. And again, people take this flippening as like, oh well, Ethereum's now a better cryptocurrency than Bitcoin. None of us think in those terms. I think Bitcoin should focus on one thing, and that should be flippening gold. When Bitcoin is perceived to be a more valuable asset than gold, and that's not a million miles away.